How do you buy properties in heated markets? I'm talking about markets where there's 25 offers on a property, but only one property listed for sale. I'm talking about markets in Queensland and Western Australia, where the demand is so high and supply is so low that it's almost impossible to buy a property there. So how can we buy a property in these type of markets? That's exactly what we're going to find out in this video. I'm going to go into how you can prepare yourself to buy properties in such a market, how you can place yourself to be competitive in these markets so that agents can take you seriously, and finally I'm going to talk about how you can snag good deals in such a market. Now, before getting into this video, if you don't know me, my name is Jathu. I'm a buyer's agent for property investors, and I buy properties all around the country in undervalued locations using a data-driven approach. So if you want to work with me, then go to my website propertyframeworkbuyersagency.com.au and book a session with me there. Now, let's get back to this video. So we're going to really dive into what we need to do to buy in heated markets. Now, before starting to buy properties, we need to really understand the market. So that's stage one, the preparation process. Now, in the preparation process, there are 4 steps. Let me walk you through that step by step. Okay, step number 1 is for you to get a pre-approval in place. Now, that's a very obvious one. Always have a pre-approval because you know the exact amount for which you can borrow for, and at the same time it gives the agent confidence that you have enough finance to secure the property. Okay, so that's the pre-approval. Number 2 is very important. Number 2 is you understanding how fast properties are selling on that market. So how can you do that? When a property is listed for sale, call the agent the next day, the day after, and maybe even the day after that, and find out when exactly that property is going under contract. So you know after how many days the property has gone under offer. So this is very important. The last thing you want to do is place an offer 1 week after the property has been listed, just to find out that the property went under contract within 1 day. The next thing that you have to do, so this is step 3, is understand the difference between the sold price and the listing price. Now, in heated markets, the property is eventually going to sell at a much higher price than the listing price. So how do you know how high above the listing price you have to offer? That's very important. Now, there are not many tools where you can find this information, but I've found out there is a free tool where you can do exactly this. So let me show you how you can do this. So go to property.com.au and key in a property that's on that market. For example, I'm going to take the suburb of Kelso and key in a property that just went under offer in Kelso. Okay, so key in the property and I'll show you all the details about the property. Now go down. Okay, and you can see Kelso property market trends. Okay, so you can see the properties that have recently been sold here. So make sure you can see the dates when they have been sold as well. And it is comparing very similar properties with the same number of bedrooms, bathrooms, and similar land size. And it's showing you the listed price and the sold price. For example, in June, this property was listed at $399, but was sold at $432,000. This property, 48 Genty Avenue in Kelso, was listed at $415 and eventually sold at $430. This happened in September 2024. Let's take one more example. 8 Arawa Street in Kelso. This was way back in March. You see it was listed at $420 and eventually sold at $430. Now we are in September, so try to look at those which have sold around that August, September to get more accurate comparables. But this is how you know how much above the list price the properties are selling for. Now this is going to give you an indication that you have to be well above listing price to be competitive with your offer. Now that you know the difference between the listing price and the sold price, you really have to know what the type of demand there is in that market. So get someone on the ground to attend home opens and check whether you have a healthy owner-occupier appeal and you have a healthy first home buyer appeal as well, right? The reason for that is you want that market to have really strong local demand or owner-occupier demand. You don't want no one to show up in the home open but still having a lot of offers on that property. That's going to give you a signal that this growth is not being driven by locals on the ground, it's being driven by interstate investors. So you got to be careful of that. So that's why you always have to monitor the local on the ground situation to make sure that there is good, healthy owner-occupier demand. Okay, now the first part is over. You've understood how high you have to offer to be competitive, how fast this market is, what type of demand there is, and now we're going to start placing offers in this market. So we go on to stage number 2. The first thing you're going to do is talk to agents, right? When a property is listed on the market, you're going to call the agent. Now, bear in mind that the agent has already spoken to about 200 people before you about the same property. You might be the 201st person that they are talking to. So don't ask questions like, how's the area like? Is there a shopping center nearby? Is there a hospital nearby? Is there a bus stop nearby? How is the crime rate in that area? Please don't ask general questions like that because that's going to frustrate them. Instead, just be direct and ask questions like this. Is the property still available? Is the property still tenanted? If it's tenanted, how much rents can I get? Is it owner occupied and why is the owner selling? Is there any maintenance issues that need to be done on the property? And finally, what price do you expect the property to sell? Not every agent is going to disclose that, but it might be worthwhile for you to try this, right? So that's all you're going to ask from the agent and to maintain good relationships with the agent, right? Now we know that. Now we got to do our due diligence quickly. If you don't know what type of due diligence you need to be doing, then check out this video that I've done recently where I talk about the due diligence that you need to do on a property before placing an offer on it. So do the due diligence and get someone on the ground to inspect the property to understand the condition of the property. If you have a home open, then you can schedule that inspection during the home open, but if not, you got to arrange that inspection as soon as possible. Okay, now stage 3, once you've done the inspection, you have done the due diligence, everything looks good, you're going to place an offer on the property. Now this is the tricky part. You can't just rely on comparables to make your offer because this is a moving market. Prices are moving up every day. So if you place an offer in line with the comparables, you're going to fall short. So there are 2 ways around this, and I'm going to break down what these 2 ways are. The first one is for you to look at comparables that have just gone under contract. So what this means is that these properties are on the market, but they've just gone under contract and you can see under offer written on that screen. Okay, so call up that agent and ask them how much it did go for. They might not reveal this. So ask them, did it go above a particular amount? For example, did it go above 425,000? Did it go above 440,000? And you might get a yes or no answer there. And using that, you can put a similar offer on your property because that property has just sold maybe about 3 or 4 days ago, right? So that will be more in line with market value of that property. Now, if you don't have comparable properties like this that have just gone under contract, then go and look at how fast the market is moving, the rate at which the market is moving. Okay, factor in that rate, look at when the comparable was sold, and then price your property accordingly. I'll just show you an example of how that can be done. So go to realestate.com.au and key in a suburb of interest. I'm going to key in Kincora in Gladstone. Click search. Now go to this section here, find out how much it costs to buy in Kincora. And then you can see the trend over the past year. So you can see Kincora has gone up by 16.4% over the last year, which means that it's going up by 1.3% every month. So let's say you have a property that sold at 420,000. That's a comparable property last month. That property would have been listed for sale 2 months ago, right? So you will have to be about 2.6% higher than that 420,000 to be realistic with the market value, because the market is moving at 1.3% every month. So 2.6% higher than that 420,000 is going to be around that 430,000. So you have to offer 430,000 for that property. Now that you know how much you need to place an offer on the property, we now go into the most important step, the terms and condition. Now this is crucial, and I can't emphasize how important this is, especially if you're buying in Queensland. Now in Queensland, you've got two clauses, the building and pest clause and the finance clause. Now every other buyer is going to put a building and pest clause and a finance clause on the contract. And this is not going to look good to the owner, because the owner wants a quick sale. They don't want conditions on the contract. So you have to minimize these type of conditions, right? For example, I placed an offer on a property for 450,000 with 14-day finance, 14-day build and pest, and an offer lower to that was accepted because they were able to go unconditional even faster than me. So price isn't the only thing that the owner is looking at. It's these conditions. So that made me realize how important these conditions were. In another instant, when I was looking for a property in Townsville, the property was listed at 485. I made an unconditional offer at 478. That means no finance, no building and pest clause. The mortgage broker I was working with was really confident about finance, so we had no issues there. The building and pest was done during the cooling off, so we were pretty confident that there were no issues with that property before the cooling off ended. Okay. In another instance, I put in 500,000 on a property in Rockhampton, and I removed the finance clause, only put in a build and pest clause. There were offers higher than mine, but they accepted ours because I removed the finance clause. The broker I was working with again helped me sort this out. Okay. In another instance, again a property in Townsville, I placed an offer on the property reducing the finance and build and pest clause. I only put 7 days finance and 7 days building and pest, and our offer was accepted. Now I had to extend the finance clause to about 2 weeks, and usually you'll find that the owner is willing to do that because they've got the property under contract. It's just another week. So you can use this to your advantage by putting in shorter finance clauses and extending if needed. Even if the owner doesn't extend, you'll still get your money back. Okay, so these are some examples where you have to be really creative with those clauses if you want to be successful. If you just put in clauses like everyone else, your offer is going to be rejected. So that's the difference between your offer getting accepted and your offer being rejected. Okay, now you understand this. You place the offer and wait for the result. And the agent might still call you and tell you, okay, is this your best and final offer? And that is usually more of a psychological thing. It makes you think that there are higher offers than yours and you need to increase your offer. But if you know that you got your offer right, stick to that and wait for the agent. And the agent will eventually come back to you if you were successful or not. Okay? Now, after doing all this, you'll still be unsuccessful. I can guarantee you that. You will not get the properties because it's such a heated market, and that's why you got to be really creative about this, right? And that's why we've got to go one step further and be able to source off-market and pre-market opportunities from the agents. Now, off-market opportunity means properties not being listed on realestate.com or domain.com. You snag it before it hits the platforms, okay? Now, this isn't something exclusive to buyer's agents. Even you can do it if you are diligent about it and you are persistent about it, and you have enough time to do this, right? So what you need to do is get in touch with the agents and tell them your exact requirements. Now, I'm going to walk you through that and how you can get this done. Now, let's say you are looking at Rockhampton and you have been looking at the suburbs of Frenchville, Park Avenue and Wandle. You have been placing offers on the market for properties and have been constantly missing out. So let's see what you can do. Okay, so now go to the sold section in realestate.com in Frenchville and then open up the first property that you can see. Now you can see the agent's details here. Get in touch with the agent and write this in the message section. Hi Lynn, I'm looking for a property with the below specs. Put in your exact criteria. As an example, I've put out 500k maximum, minimum 500 meter squared, freestanding house. I want a brick veneer home. I need a minimum of 3 beds, 1 bath. I don't want any maintenance, easy to rent out. I'm looking at Frenchville, Wandale, and Park Avenue. I'm finance pre-approved and ready to go. Now, this is going to send a message to the agent that you are a very active investor and you are ready to buy property. Now, you have to do this with all the agents who have sold the properties in that particular suburb for at least 1 year. Go back 1 year and send this message to all the agents. And you have to be consistent with this as well. You can't just do it one time and expect agents to give you off-market or pre-market opportunities. Send them reminders every 1 week, every 5 days or so that they know that you're actively looking for properties. And I have got properties this way. I do have all the agents' email address in my database, and I email them regularly, telling them what type of properties I'm looking for. In that way, they're aware of what exactly I want, and they can send me off-market and pre-market opportunities. So try this out. If you're missing out on properties, you will definitely get a response within 1 or 2 weeks from different agents. You will get off-market and pre-market listings with less competition where you can secure these properties. Now, as a buyer's agent, I also have the added advantage of having access to a portal that is only accessible by buyer's agents, where agents will put up pre-market and off-market opportunities. So I do have access to that. But even if you don't have something like that, this method itself, while it's a bit manual, will get you some off-market and pre-market opportunities that you can place offers on. So that's it from me, guys. I hope you found these tips useful. Make sure that you apply these tips and tricks when you're next buying a property in a heated market, and let me know how it went. Now, please like and subscribe to my channel because it'll really help me make more videos like this, and I'll see you in my next video.